Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
I think I just saw Santa walk past the window.
Frank, the food! You left the oven on!
I'll get it.
You're both here? I could have sworn I saw your ship fly by.
I don't want to talk about it.
It was Santa's sleigh. Jerome, so happy you could make it. How's your day been?
Just close the door.
Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
All right, everybody, welcome back to another live stream. Look at this. I got well, I just jumped out of the shower. I ran to work here today. I was behind schedule. Last night I had a little bit of a birthday dinner and we were out late, so I had a late start this morning. But we're here and we're ready for, of course, one of the biggest streams of the month. It's NFP day. Let's take a look at this. We'll take a closer look at what we've got coming down the pipeline. We've got the unemployment rate and the employment change number here, forecasting for 184,000 jobs compared to the previous. That is 150,000 last time around. So we've got jobs numbers coming out today. It's December 8th, and we are back in the studio trading and setting up here for the end of week potential moves that could be coming next. We're going to be talking indices, commodities, currencies. We got everything prepped and ready. And again, check out the wild hair today. I've got no product in it. Usually I spend about 3 hours each morning getting my hair ready. So today didn't quite hit the 3 hour mark. I only did 2.5. So I'm just totally kidding. It usually, I don't know, it's about five minutes prep. So today it was 0 minutes prep. It was comb, run out the door. Anyways, we've got charts to look at, guys. Let's take a look here at what is moving here today. I'm going to switch over to my watch list here and let's talk charts. So we've got, first of all, I want to start with the dollar. Dollar still in what I think is a overall downward trend. If you're watching currency pairs, the reason we start with the dollar is because whatever you're trading, indices, commodities, gold, oil, silver, currency pairs, whatever you're trading, the dollar is where I usually start my analysis for the basis of where I'm looking for everything else. So right now, I still think that the dollar is likely to continue to come down. We pointed at this 104 level. We did actually see a bit of a reaction, but today it's time to see if there's follow through. And I want to clarify something. There is no predicting what is going to happen with NFP. There's no, I know the numbers before everybody else. And if you did know that, then you're doing some sort of illegal activity. You know something that the rest of the world doesn't because you know something that the rest of the world doesn't. That is in markets, it's not okay. So insider trading is not something we do here. So we don't know what the NFP, the non-farm employment change number is going to be. All we can do is react to what we see. So let me be clear something here. We are not going to be gambling on the spike. That is a fool's game. I think that is a quick way to lose a lot of money. In fact, here's the rundown for how I treat NFP. Jobs numbers can give you a solid indication of what the U.S. economy is looking like. The big two, in my view, are jobs numbers and the inflation report. And we have that, by the way, coming Tuesday. But for the dollar index, here's what I'm looking at. If I'm wrong, if the dollar does actually pop, which would come off of probably stronger than expected jobs numbers and more wage growth, those sorts of things could actually break this downward trend that we've been seeing on the dollar and perhaps signal a new trend to the upside in the short term for the dollar index. So I want to be clear. I'm not saying I know that the dollar, for example, is going to fall, but my bias, generally speaking, is more on the sell side. So I am looking at things like euro dollar to the upside, pound dollar to the upside, gold to the upside, indices. I'm still long. I have a trade open, and today may be the end to that trend, or it may be the continuation of that trend. Let me just be clear about what I'm indicating. I have a couple trades open. We'll pull up the charts here. I do have a silver long position. I have an S&P 500 long position and my Apple share as well. So there you go. There's 762 people. If you guys are enjoying the stream, do me a quick favor, hit the thumbs up button on this stream. It would do a lot to get more people in here as we prep for the event. Again, we've got just about 6 minutes here to go before the NFP number. What time frame is he on? I'm on the daily chart. You can always see my time frame at the top of the screen. See 1D or daily, 4 hour, whatever chart I am on. You'll see it right there. Let's take a look at gold because there's people talking about it. I mentioned I'm long silver. And I will come to silver just briefly. Let me go through gold real quick. Daily chart perspective remains the same as yesterday. If you're looking at the daily, I think a pullback to 2000, if it happens, would be an area that I'm interested in possible longer term buys on gold. You might say, well, Nick, it totally rejected. It's got to reverse. Sure, I would agree with you if it breaks 2000. Okay, that level is huge for the bulls. This level, I don't think you can be fully bearish, in my opinion, unless you get a breakout of 2000. If we comfortably close back underneath the 2000 mark, perhaps on really strong jobs numbers, which again, we don't know the outcome of that. It's still coming down the pipeline. That information comes to us in 5 minutes. from the Bureau of Labor Statistics. So the question now becomes, if we see that breakout, then perhaps we talk about bigger term sells on the gold market. But right now, my bias, until proven otherwise, remains intact. Bullish on gold around $2,000 an ounce. We'll see if we get that pullback. On the lower time frames, take a look at the hourly chart with me. We pointed this out. If you were here on the stream yesterday, then I want to point to something really important that we discussed. Yesterday on stream, we pointed out that this area of resistance was stubborn for the bears. 2037.5 held significantly each time sellers were able to push this thing back down. And this is where we were yesterday on stream. 24 hours ago, we were talking basically about, hey, this thing looks like it might be breaking out, but we gotta wait to see that candle closure above resistance. And thank goodness we did wait for that, because look what happened. Completely reversed. I thought price was going to break out. I was waiting for the opportunity. If you guys saw me yesterday, I was rubbing my hands together to buy gold on a breakout. We didn't get the breakout. Did we get some fake outs? Sure. But this is, again, why when I talk about a candlestick break and close, I want to see that confirmation that we truly are breaking through the highs. Now, fast forward to today. Game plan today for the day traders out there, or the short-term swing traders like myself, the question would be, can we actually get this kind of move here? Can we get that push back, and perhaps this time we don't fail out at the highs, but in fact we close above them confidently? That is going to be an interesting concept to think about here as we get close. Let me just give you a forewarning, guys. We've got about 3.5 minutes to go before the event. We do have plans to trade for the rest of the day inside of our Discord channel. If you're not already inside of our Discord channel, then I don't think we have anybody in the office just yet to answer questions. But what we'll do here is we'll just drop, I'm going to just drop the link here, HTTPS. Just for information, in case you are interested, we're dropping the VIP chat. I'm sorry, the VIP access link is right here. If you'd like more information about joining us, you get access to all the trades when they're taken, shared directly to your phone. I'll show you what it looks like, by the way, just so you can see a little bit of context. Our signals group is, of course, Frank, myself, and Ivan, who you've probably seen, all three of us. Well, you've seen me right now, but you've probably seen Frank and Ivan as well on the show here on the live stream. So we share all of our trades in detail. So when we take a trade, when we've got positions on, you get to see them. Speaking of which, I am long silver going into this event. And I'll show you silver and I'll show you the S&P trade. Both of these are signals that I am still in. VIP members, we are watching the S&P 500 and we are watching silver today. Not what you might have expected, but I want to show you the silver chart really quick. So I like silver off of the daily. And here's the context that I'm looking at. We had this downward trend and then price breaks through the highs with conviction and is now pulling back. I like the fundamental story of silver and I like the technical story as well. Why? Well, quick breakdown. The economy in the U.S. seems to be cooling. Inflation's coming down. And today we'll get some confirmation on the labor statistics side. Is the labor market also continuing to cool? Well, we've seen a lot of data this week that would suggest that. But today, the rubber meets the road. It's time to see if the, in fact, NFP number will confirm this for us. If the number is confirmed, it is likely. And when I say confirmed, I mean if the number continues to come down, if labor is cooling in the U.S., then the silver market probably rises. Okay? Silver and gold, by the way, they'll probably move in tandem as they usually do. The question then becomes, what if I'm wrong? Well, you always have to know that if you're wrong, you have a plan to get out of a position. So for me, I have my stop loss below market structure. So I have this levels drawn out. I am long silver, and if price breaks through the lows, then I'll be out. Again, there's full context to why this trade was taken inside of our group. And again, we share all of our trades inside of the group. We are getting close here, about 40 seconds out to the setup. So let me actually go ahead and switch over here. We're going to go 4 screens on in front of us here. We've got the dollar index top right. We'll keep silver in the top left. Why not? Drop it down to the 15-minute chart. We'll put let's do gold bottom left. Breaking news coming in here. We got silver, gold, silver up top, gold up, and we got the S&P 500 bottom right. Dollar index is on the top right. Let's see what we get in terms of NFP. Here it comes. All right, and the S&P dropping here initially, gold down, Is my silver chart just frozen? What the heck? Very weird. Well, gold is coming down here, guys. 2020 trading, 2019. S&P 500 also making a move lower. And look at that, dollar popping higher. This might suggest that we had a little bit of some heat in the labor statistics. Let's take a look and see what we've got here. It is still pending. It is 199K, so above targets in terms of what we saw. Now, you might say, well, why is that green? Why is that good? Well, it's good for the dollar because it shows economic strength. But why is it not so good for gold? Well, it might indicate that perhaps labor, and by the way, this is a pretty smash hit in terms of so far what we're seeing here. This is a pretty hot labor read compared to. So you look at that, you got 3.7% unemployment rate compared to 3.9 and 199K jobs created compared to 184K. That is a beat in terms of jobs data. So hot jobs data is causing the dollar to pop here, and perhaps we do need to come back. There is silver, by the way, dropping hard. So if we take a look and we go back to our idea here on the dollar index that we talked about moments ago, let's pull up the dollar index. Let's take a look at this. This is definitely going to nullify what I was thinking with the dollar index. So let's take a look at this. For now, well, actually, I might take that back. We're still very much at this key level. 104 has been the point that I think that the dollar rejects. Now, yes, we are seeing a pop on the dollar index here this morning. So price is coming up off the lows, rising, rising, rising. And now the question is, at these upper extremes, do you get the seller's reaction? Well, again, not helping us is the labor statistics here this morning as we got hotter than expected jobs. By the way, we're still waiting. I actually am very keen to see what the average hourly earnings came out to be. That's going to be your wage growth statistics. We would probably want to see that number come out cooler. But in fact, if that number comes out cooler, you probably get a little bit of a reversal on S&P and things like that. Nope. And you don't get that. You get higher than expected. So wages increased. Jobs were created. Unemployment rate ticked lower. So why on earth would that cause the stock market to go down? New traders probably going to get confused by that. It's because, and it's not going down that much, to be completely fair. The hourly chart here, it's just still trading in a range. It's not like we broke through lows or anything. But the reason that this would be considered bearish for things like gold, things like silver, things like S&P 500, here's why. Well, it's because the labor statistics being hot might suggest that the Fed will not be done sooner. Well, I'm sorry, they might not rate cut sooner. A lot of people have been getting very high hopes that the Fed would be cutting rates sooner rather than later. And so this is a bump in the road, certainly. Now, is it a complete full-blown, oh, Fed's never going to be done rate hiking, we're back to just rate hike cycle? No. It's just that this data does not give us, or doesn't give the super bullish people another spike higher. It's not an adrenaline rush for them because, again, labor statistics, broadly speaking, are still cooling. But take a look at this. Here's gold completely rejecting. And again, this makes me very thankful that I did not take that trade yesterday. We pointed out we needed to see the break and closure above this resistance point. We did not get it. And so today I was thinking maybe with NFP, we could have gotten some cooling jobs numbers that could get us there. Nope, didn't happen. So we actually got hotter than expected jobs numbers. And we're seeing overall prices roll over on gold. Same with silver. That's definitely not good for my silver position here. Let's take a look at silver, talk about this a little bit. So I am still in my trade, and this is a bit of a swing trade. So it's not like I'm about to get stopped out by any means. And I'm happy to stay in this trade. But again, today's number definitely didn't help me, put me back from a somewhat profitable position down now into the red slightly on the day for silver. So we'll continue to watch that. Now, what I do like about this is that if it does squeeze lower, I do actually like gold at the 2000 level. As we pointed to earlier, we talked in detail this whole week about, I do like gold on the long side, but I'm trying to be patient enough to get 2000 an ounce. And so we'll see if that comes into play. So we're watching the gold market here, the silver market, metals market taking a little bit of a beating, and S&P 500, as I mentioned, making a little bit of a pullback. I'm curious to see what this had any impact, if at all, on the Russell. This is, of course, small cap stocks coming down here this morning. You've got also US 30. Let's take a look at the Dow, see what's going on with Dow Jones. Dow Jones coming down here, but still not necessarily breaking through key support just yet. And just a quick nod to the dollar yen. Yen pairs. Oh my gosh, the yen is one of those things. It is such a wicked child. It can be so volatile sometimes. We did see the yen just plummet. I believe, and I think we have Frank joining us on the call. We have Frank and Ivan going to be joining me in just a few minutes here, in a minute or so. The dollar yen just plummeted yesterday. And I think Frank was actually short. So I'll be asking him a little bit about that. But also the question then becomes, is this a new bull market for the Japanese yen? I guess that is going to be the topic that I go to with Ivan and Frank in just a minute. Real quick, before we do get to Frank, Ivan, the two fellow A1 trading coaches, members inside of our channel here, just a heads up, if you're not already in the Discord channel and you would like to join, you can get access to all of our trade alerts. Every trade that we take in depth with explanations and breakdowns for you to read along with can be sent directly to your phone or to your desktop. If that's something that you're interested in, we'll drop a link to our direct message center here in the chat right now. Click this link if you'd like to speak with someone on our team about getting a membership and joining us. If you're serious about your trading and you're ready to take that next level, come join us. We do coaching calls throughout the week. We have a live chat room where we're trading together. When the stream ends, we are still going. So please feel free to join us in the Discord by shooting us a direct message on our website there. The link is right here. It's linked in the chat. Now, quick break, guys, and we'll come right back to Frank and Ivan. We're going to take a look at some of the yen pairs and our reaction to NFP. Coming in after this.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 EDGEFINDER 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap. And if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the EDGEFINDER and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right, guys, welcome back to the session where we've got Ivan and Frank to react here to NFP. Ivan, we'll go to you first. NFP, kind of surprising, right?
Nah, it's all right. It's just where it is supposed to be. It's a bit lower than average, but 200,000 new jobs, relatively fair enough. Though unemployment rate, as you had for 2 milliseconds, is stronger than expected. I don't know if that's good, but it's supposed to be going higher. But hey, why not?
Yeah, and it is interesting. I mean, 3.7%, that's a tick lower and definitely against the consensus. The thought process was jobs continue to cool, unemployment rate probably starts to rise. And so this tick lower is pretty. Also, by the way, you had hourly earnings also ticking higher. This is there was a delay in the average hourly earnings, at least on Forex Factory coming out for a second there. And I was like, if we see this number stay hot while this number cools, like this is kind of the inflationary read, right? The average hourly earnings rising or falling. So I was low key hoping. I was like, come on, let's see. Maybe we got 0.2, maybe we got 0.1, but didn't quite get that. So all three numbers in the green. Frank, what do you think? Any initial reactions? And I know you also point along a lot of times to the trend of this stuff. So what do you think? Does this change any outlook on labor statistics stuff?
Well, yeah, I think so. NFP, I could argue a bullish case for higher or lower, as in like beating or missing expectations, as long as, inflation is doing what we need it to do. But I think it's the fact that wages came up again. So we're seeing an increase in earnings, hourly earnings for the average worker. So that's the sign of inflation that we need to be concerned of, and I think the market is actually kind of reacting appropriately, just because they're very conscious of what economic numbers can do to spending, to how much people are getting paid, how much circulation is in the market. So I think that the initial reaction is kind of justified, that we didn't want to see a higher percentage of hourly earnings. But NFP, it could be, as long as we have good jobs numbers, as long as inflation is coming down, that's what we want to see. So I think this is kind of a somewhat of a bearish case, but the problem is wondering where the market's going to go, which is always the question. But the initial reaction doesn't always mean the overall result. So I'm not entirely sure with this. I think this might be a bearish kind of sentiment, I guess, for risk on pairs. But the 2-year and the what's it called, UJ, kind of doing the same thing, the initial spike and then somewhat of a pullback right now. I think it's I think also keeping the Fed in mind. It's good that investors are like, well, we got to watch out for, earnings was up, so we got to, or wages was up, so we got to watch out for that risk off sentiment. But I think the Fed is pretty clear in that sort of thing, hiking and raising interest rates isn't really what they want to do anymore. And some countries have even said that they can't really afford it, a borrowing costs above, 5%. So I guess we'll just see, but it is looking in the short term relatively bearish, just because of the beat in wages and the beat in NFP. But the trend overall, if we were to pull up Forex Factory on hourly earnings, is still, not strong. It looks stubborn though. You see lower levels and then occasional spikes, and that's similar to NFP. But the expectations have been the same for almost a year, pretty much. And
and I guess when we first brought on Ivan pointed out that this doesn't necessarily change everything. And Ivan, I want to ask you, so obviously Frank is pointing out that there are some spikes along the way, there's some bumps along the way, but is the labor cooling trend overall still intact? And I guess also, with whatever charts you're looking at, is there setups that are coming alongside this?
No, I don't see this as well. I'm looking at something completely different. I'm talking about dollar yen later, but I don't see any difference in it. Of course, with average hour earning being higher, though, unemployment rate has a lot of volatility in it, though it was 3.9, 3.7, 3.9 last time. The thing is, we haven't really seen the effect that you should have expected when you have inflation going from 8 to 3. We haven't seen a lot of layoffs across the economy. That is that is surprising even to Powell. So, but keep in mind what Meta does, what Google does, and where are they coming big layoffs? There has been that, was it half a year after COVID, and then they all got absorbed into the economy. But also you have now 1 million new businesses being created, which is up like 50% from last year. So even though people are letting go, they're actually getting employed anyways. So, yeah.
Sure. Yeah, no. And I think in my opinion, to kind of go off of that concept too, and I know, Ivan, we definitely got to talk about yen, because I think all three of us are eager to speak about that. The last thing I want to talk about just with the dollar is, in my opinion, Frank's idea makes a lot of sense in terms of, yes, you get a spike in some of this data here today. And I think sometimes that causes a knee-jerk reaction, which we did see, right? Initially, the dollar index traded up, but look at what happened. This is a 5-minute chart. Dollar index shot higher and immediately erased that. And I think as fundamentalists, I think one thing to consider is that the trend, the 3-month rolling average of these data points is perhaps arguably more important than just a singular point. Now, if it was massive jobs growth, then that would be a little bit different because suddenly the trend would change dramatically. But this number, while yes, it is hot, I think the market may be saying, hey, you know what? The trend is still lower, and it's permissible to have, I guess, a little bit of heat on the labor statistics here and there. But regardless, dollar popped, dollar fell. And I think that perhaps some of the traders out there are viewing this as a pullback opportunity to stay short. I think last thing I'll say on the dollar index before we go to the yen is, this daily chart here in terms of a price action signal, I think that the bearish trend is intact unless we break and close above this. So I want to go to Frank first on this because we do have Kenzo coming in behind you, Frank. So I may we'll go to you on this, let you speak about it, and then we'll let Kenzo join us on the call as well. So Frank, dollar yen, we had what a monster. I know all three of us are like just probably shell shocked by that move yesterday. It was a huge drop. I think it was like what, 500 pips? What'd you say, Ivan?
Yeah. So,
but I can explain it. That's what I'm waiting for.
Okay, go
There's
ahead.
a reason behind
You're
it.
up next. You're after Frank. Frank,
okay.
What's the reaction?
I didn't have an explanation for that giant sell-off in the middle of the day. However, I am short UJ, and price went all the way to my take profit and didn't execute. So I'm still holding in this trade. I'm still bearish dollar yen. I'm bearish dollar overall. But I think as long as it doesn't break that, what you're talking about on the dollar, if it doesn't break that high, I think we're probably in good hands for dollar shorts. But I don't have an explanation for the capitulation yesterday, so maybe Ivan can tell you.
Okay, Ivan, you've waited patiently. I know this is your topic. Yen move yesterday, 550 pips in a single day. Tell us what happened, why did it happen, and tell me the magic next thing that the market's going to do in reaction to this.
Somebody had a $1.6 billion trade with a strike price of 0.00658 and 0.0069 and 0.006925 with expiry today.
Oh, wow.
So somebody was squeezed out of their position. The day's not over still. So basically, the market was squeezed or the JPY futures was squeezed yesterday, or this trader was squeezed yesterday out of his trades, because when it started to go above 0.00685, they had to start buying to cover their loss, to make sure they didn't lose. So that's what created yen futures to go higher, yen to go stronger, dollar yen to fall, and it's basically a technical. What do you call it? Call it a technical trade. It's not really fundamental. It's not really BOJ. It's not really anything. It's just
a squeeze, big squeeze.
Well, the initial cause was from the BOJ. They were talking about raising interest rates back into the positives, but that move, I thought, was already happening from the sell-off we were seeing, and then we saw an even bigger one. So I guess that makes sense. Someone got squeezed out of a giant position, caused like huge volatility.
So what I'm saying is the technical stuff of why we moved so far, because it doesn't cover what Ueda said. It shouldn't be that much. Yes, Ueda taught. Yes, insinuated something that we might change monetary policy soon, but that doesn't justify the amount or the move that happened.
Yeah.
So I would say it's more of a black swan, or not a black swan because we knew about it from time, but yeah, it was a squeeze basically.
Yeah, and to add to that, the crazy market swings, we've got stuff going on today across the yen pairs. You had dollar yen still. I mean, what kind of is scary about the dollar yen move is that it dropped so much yesterday, and what we've seen is a lot of times the yen will do a crazy move like that and then just reverse all of that. Yesterday, it seemed to sell and stay selling. I think, Frank, that was part of the reason why you were looking to get and stay on the short side. And Frank and I were talking about this, and I know we've got Kenzo on, so I'll go to Frank with this last word, and then we'll bring in Kenzo. So yesterday, Frank and I were talking about the idea that perhaps this is a newer trend, a secular shift on the yen side of things, because you have other Western central banks, Europe, the UK, the US, talking about kind of getting into this rate cut conversation. Meanwhile, Wada is out there speaking about getting interest rates into the positives again. So it's almost like a secular shift. And I guess, Frank, do you have anything to add on that? Like, do you think that there's potentially, I mean, obviously you shorted dollar yen, so you kind of are in that camp. Do you think it's like a 3-month signal, like maybe a 6-month, a year-long kind of secular trend? I mean, the dollar yen has been just a monster move in the last, year. Is it time, I guess, for the yen to take a turn?
Yeah, so even with this talk of the potential rate cuts, which I didn't think were going to happen this year at all, I was thinking what they were saying was expected third quarter of next year. And so even with that, I was still bullish dollar yen up until yesterday when I heard the news. So because we're still in a restrictive environment, the yen is very loose in terms of monetary policy right now. But the talks of that, of actually finally doing this and going to zero or above zero, this is the opposite narrative now. It's the same reason why I was long dollar yen is now the same reason why I'm short biased dollar yen, is because now we're talking about coming down, which will happen at some point in the future, probably next year. And BOJ is talking about going up in rates. And that's just a complete swap of what we've been seeing. So that is, I guess, my new bearish thesis on dollar yen and yen strength overall.
Sure. Okay, well, Frank, thank you for that. I want to thank you for coming on as always. We've got Kenzo waiting patiently, so I'll kick you out, Frank. Let you move on with your day. Thank you for coming on, reacting to NFP with us, and talking a little bit yen. I'm sure we'll have you back, of course, on the next one. So thank you, Frank, for joining us, and we'll see you next time.
Sounds good. Thanks.
All right. And now we'll bring in Kenzo. He's been waiting patiently to have his word on the subject. So we'll say hello to Kenzo from Extra Hot Forex. Hey, Kenzo, how are you?
I'm doing great. Thanks. And you, man?
Doing well. And it's good to have you back on the show. Kenzo, Ivan and I'm sure you heard a little bit of us speaking about this. We're talking about yen pairs as well as the dollar. I guess what are you watching here today? Do you have any thoughts on yen pairs, by the way? And I guess this dollar move, huge spike, totally reversed it. What are you looking at today?
Yeah, this week I was on the dollar pairs. Unfortunately, I did not really check much on the JPY pairs, but I saw the spikes. I tried to find out and what's really happening. I did not really get the proper information why it was moving like that. Maybe it's CPI, but I think it was 2 days ago. Maybe there was talks maybe about interest rates, but I was focusing on the dollar. So on the dollar side, I liked the reversals of the GBP Euro USD, and also on the currency pairs, we had some nice consolidation. So I like also what we saw on NFP, not really stronger figures. So which means we might still see a continuation of this sell on DXY, which means other pairs like gold, currency pairs that goes with the dollar, they are going to gain some very nice momentum.
Sure. Yeah, and I think it was kind of a confusing move to me as well, the dollar move higher. Ivan, what do you think with this dollar move? I'm looking at, let me just go to the daily chart really quick. So dollar index price pulling back jobs numbers hot, wage growth hotter than expected. What was causing this move higher? Was it just that you were speaking a little bit about technical moves? Do you think it was just a technical bounce for the dollar, or is there some potential of a breakout?
The reason is people exiting their short positions on dollar because we have to pause. We have to wait a bit longer before the rate cut. You have to remember that the rate cut has been expected for March 2024. So this one has to start showing signs that we are going to pause or cut. So it's just, I would say, just exiting of trades. And the fact that the market come back 100% or close to 100%, to me, in my trading, is a failure of bullish move. It can, of course, still continue later, but 100% pullback is an unsustainable move. So you wouldn't see dollar at 105.20,
Sure.
also next resistance level, anytime soon because of it.
Yeah, I tend to agree, and I guess with that, we can branch out from just beyond the dollar index. Do you have a currency pair in mind, Ivan, that you're interested most in on the dollar side?
No, I'm somewhere in between now. I like nothing really is setting up. You see the dollar is going into a range. Your dollar is lower. I can't sell that or buy for that matter. Pound is making making a new lower low. I'm still dollar bearish, so I'm like, nothing is happening here. I'm waiting. I was hoping for bearishness.
Yeah, and again, to your point, I'm kind of in the same camp. I really like to trade things like euro and pound. I know Kinzo also looks at those ones as well. I think the pound is looking kind of interesting. It's pulling back. We'll see if we can find some support around here. We've got this daily chart, which still seems to be in an overall uptrend, but again, taking on a little bit of pressure here recently. You pointed out something, and I want to ask Kinzo about this too. Now that the dollar trend is pretty bearish, it seems like kind of becoming the consensus is dollar bearishness, rate cuts are coming, but now it's almost like a burden on the bears to prove that rate cuts are coming, that they're coming, not necessarily just blanket statement, they're coming at some point, but are they coming soon or are they coming later? And I think that perhaps some of that dollar strength that came in was the idea that, well, they are coming, but it could be a while. And today's NFP number definitely does not help the bearish case in that front. But I guess, Kinzo, what do you think? So dollar pairs in general, euro dollar, pound dollar, dollar yen, any dollar currency pairs that you're watching close?
Yes, I was on Euro USD, GBP USD. So on my side, I'm actually still bearish on the dollar. I'm expecting to see some bullish on GBP, Euro USD. I mean, Euro also to push up. That rate cut, I think even if maybe it might be later, but in general, if you checked from last month, all the events or economic events, they were a little bit weak. So that it shows the cool off of the economy. So in the long run, even if they don't really cut the rates, but as long as they can pause them, that is also a good thing. So now everyone is just looking on other pairs. We know that we're not going to see any aggressive bullish move unless if Powell says something different that will change the market. But for now, he seems to be changing the tone. Things are now going a bit slower, and that's what we want. So going further, maybe next year, we might still see a continuation of this bullish or this uptrends against the dollar.
Sure. Yeah, no, that's a good point. And I guess, even a pause, it's still a very big shift from what we saw most of this year, which was just unending kind of rate hike concepts. And I guess it sounds like, Kinzo, that with that overall dollar weakness trend, that this move higher in the dollar could be kind of a pullback opportunity across not just the pound, but also perhaps other currencies as well. I do kind of see what Ivan is pointing out with like NZD USD. You have some of these charts that just don't look quite healthy. But Ivan, do you think, like, for example, Kiwi dollar, do you look for signs of life before trying to buy it? At what point would you get bullish if you like something like Kiwi dollar or Australian dollar? How would you approach, or what would you be looking for to actually get into a trade?
Okay, a long story, very short. I don't like ranges, and definitely not after moving. How much has it been? 300-400 pips. That signals pulse and wait. So I need a new high and a higher low and higher, and then we can continue. So my little thesis on New Zealand needs to go at least 100 pips up before I even slightly consider it.
That's a good point, and I think that's a good thing to point out to newer traders. A lot of times, people might say, they might respond to that and say, "Well, Ivan, why would you wait for it to go higher before you buy?" But momentum is a real thing, and I guess to your point there, proving that we're out of a range is big. I mean, here's the hourly chart. I'm sorry, the 4-hour chart on the Kiwi dollar, and it is pretty choppy. I mean, that is a back and forth market move, and perhaps some traders who are a bit more swing tradey, longer term, maybe they're comfortable holding through a period like that. But I'm with you. I definitely would like to see, momentum pick back up. I'd rather be there for the moves rather than waiting for a move to maybe happen. So I definitely agree with that consensus. I also want to, I know we talk a lot about indices when Kenzo, you're on. So Kenzo, of the indices, impressive move, by the way, big drop, big pop on the S&P 500. The Dow mimicked the same kind of move, and the NASDAQ as well. Big drops here initially today off of NFP numbers, but the market jumped back. Fundamentally and technically, I guess, what are you thinking on any of the three? You've got NASDAQ pulled up. What do you think about NAS?
Yes. I think we actually did give NFP too much attention, and I think the market is already decided already. I think whatever that we had, CPI, unemployment claims going back, all those economic events, they were like seriously not really good. So they did not really put any strength on the dollar. So everyone, it's just looking for a very nice weak dollar. And you can see by the stocks, mostly indices, they panic during NFPs and stuff like that. But this move here is quite smaller. And once the market opens in 28 minutes, we might still see a nice push to the upside. So I think this is a good sign to show that 80% or maybe let's say more than 50% of traders or investors, they think the dollar is still going to lose some momentum, because if it was stronger, we're going to see a proper sell there, but it's not happening. It's not happening.
Sure. Yeah, no, and I think you're pointing out something about the NASDAQ in particular that I think is interesting. A lot of times people will look at something like indices and they will play that, oh, it's too high kind of move. But to reflect or mirror what we just talked about with Ivan's point about, okay, you have a big move similar to Kiwi dollar, which, by the way, as you guys probably know as well, Kiwi dollar, typically a risk on asset, not perfectly, but generally moves in a lot of the same direction as perhaps a high risk asset like the NASDAQ. So we're seeing a similar move. We have these explosive moves higher in risk on sentiment, and now we're seeing a bit of consolidation. With the NASDAQ, similar to Ivan's point about waiting for that possible next move higher, as much as it sounds crazy, I think the only way I would actually look to add or build a position on NAS or US 30, I already have my S&P trade, but for me to add to one of these, I actually would need to see a breakout higher, not a big pullback lower. I mean, I would like a pullback, but not until, quite far away. So momentum trades can be really interesting. Ivan, do you think the same concept with NASDAQ applies, or just generally, I guess, stock indices? What are your thoughts?
The slow burner is the one that always going to win. And though we are losing momentum now, though we're going into consolidation, you still can get Christmas the Christmas rally and the New Year's rally, right? But to be honest with you, we don't have lower lows. So, okay, until we have that, I guess you're still going to stay in our position, still stay in the position of looking in for longs. But of course, if CPI next week comes out lower than expected, I think it's going to go even higher. But
actually, you made a really important point there, Ivan, too, about CPI next week. Maybe Kenzo pointed out that maybe we're overhyping NFP a little bit. We had a bunch of jobs numbers, JOLTS. We had unemployment claims this week. It showed some cooling. Sure, NFP was hot, but you just pointed out that CPI is on Tuesday, and it's arguably an even more important metric for the Fed's narrative. They're very clear with what they want to happen. Their clear objective is getting inflation down. If the labor statistics stay relatively hot, can those two things coexist? It's possible. We have energy prices. Look at oil. I mean, this contributes to cooling inflation. At first, you might say, well, doesn't change core, right? Core inflation won't be impacted by this, but it will trickle in over time. We've had that conversation many times on the show. If energy prices are lower, people are spending less money at the pumps, and so are the supply chain, the supply lines there. That number trickles through the system and can be disinflationary as well. I mean, U.S. oil trading at 70.81. That has got to be a multi-month low back from the summers. And we got to talk oil. Kenzo, do you trade oil? And if you don't trade it, does it change anything about your bias? Does it confirm the concepts that I'm talking about in terms of the disinflation trend staying intact?
Yes, I do. I don't really trade it that much, but I do actually follow it because it's also a good indicator, especially when we come to CPI. So since last week, it's been cooling down. So at the same time, as you said, it's also a factor on the inflation side. So that shows the cooling, and it's been aggressively pushing lower. So if it continues like that, I think as it's Friday now, it's much better for us just to wait for CPI next week. And if we still see another cooling off, that it's a good way to run. I think we will be starting with a nice uptrends for quite some time, maybe until next year.
Sure. Yeah, no, I generally agree. And it's always good to have all three of us, whether it be Kenzo, Frank, Ivan, Tom. We have all these different people. It's nice to hear sometimes opposing, but oftentimes commentary that I guess reaffirms biases or sometimes challenges them. That's really important, and that's the purpose, I think, for the listeners, for those of you guys who are watching. I hope that these sessions where we bring on people like Kenzo, people like Ivan, who are knowledgeable in their skills, craft, they trade in their own ways, they have their own unique styles, but having like this coffee shop where we're able to chat markets on the internet, it really is a special thing. And I also think it is a very important thing to actually, everybody thinks kind of trading is like this like solo lone wolf adventure. And while it could be, I suppose, I think it's really valuable to speak with other traders, especially sometimes when they don't 100% agree with you. And I think it's a good thing. So I guess, Ivan, I'm gonna let you go for a little bit. I'm gonna also step out. We'll give Kenzo the floor for a few minutes. But before we do that, let me just say this.
It's Friday!
It's Friday. It's Friday. Ivan's got to get going. He's got a kid, he's got a life, and he's over. So we got to let him go. But anyways, Ivan does do coaching webinars within our group. If you'd like to get into those, again, you can find that inside of our Discord channel. He also has a YouTube channel. We're going to drop the link to him and Kenzo's YouTube channel. If you guys aren't subscribed to both of these gentlemen, wonderful free value being dropped there each and every day. So please make sure to go support our guests. They do make this show what it is having all of this different commentary. So Ivan, thank you very much for coming on, and we'll see you on the next one.
Thank you very much for having me.
See you, Ivan. Okay, and Kenzo, we're gonna give you the floor for a little bit. We'll let you take over the show. I know you probably have plenty of charts to go through. Guys, stick around with Kenzo. He's gonna take over for a few minutes, do some technical and fundamental analysis, as he so often does here on the show. And Kenzo, I'll be back on the show with you here in just a little bit. So you're in control.
Okay, thanks.
All right, sounds good.
Okay, good day, guys. Good day. I hope everyone is doing great. What's really happening, guys, on the market? Firstly, I will be going straight to DXY or dollar index. By the way, you can also let me know which pairs do you want me to check. I will also check that. I can see someone said AUD USD, please. Yes, I will start with that. So, firstly, I will just go on DXY so that we can understand where is the dollar going, or the strength of the dollar. As we did actually try to explain about the dollar momentum, you can see on my screen, it's, let me just use maybe a daily time frame. You can easily see that the market is trying to go even lower. This is a daily time frame. We can easily see that the market was going up, and this actually was showing the strength of the dollar. Now it's trying to do what, to push even lower. Yes, you can see that on the daily time frame, we don't really see much of an impact from NFP, and it's not really surprising. Everyone is thinking about a dollar losing that momentum. We can even see it from this part. The dollar was losing some momentum, but I like the fact that we have a nice reversal. So this might push the market to push lower if the market is going to respect this resistance. If it breaks, yes, it's possible. Sometimes we can be wrong, but with the structures that I see now, I'm expecting to see a continuation of that sell. You can see the market created something here. We have another structure, and the market is just reached that level. So I'm expecting the market to respect that. If we break out, it means that we're going to see some changes in the market. But it's Friday. You have to just take it slow. You have to take it slow. So let me see. Someone said AUD. I see AUD USD. I see CAD JPY. I see gold. I see USD CAD. Okay, let me start with AUD USD. What's really happening on AUD USD? Where are you? So AUD USD, it seems to be pushing lower, but the best way, I think, we can just go on a daily time frame just to understand what's really happening on the bigger time frame. So what we see here, it's a bigger time frame. The trend shows us that, you know what, it's actually going down. AUD USD is going down. We saw that the dollar is losing some momentum, but here on AUD USD, it's a different structure. It still shows that the dollar is still stronger. We see the market pushing even lower. So there is a chance for the market to do what? To continue pushing lower. And this sometimes happens. Sometimes you might check other indicator like like USD index, like dollar index, going lower or losing some momentum. But when you check with other pairs like AUD USD, the dollar is still very strong. It depends, because maybe AUD, they did cut their rates, or they did not really increase their rates, or maybe their inflation is going down. Those factors, they also affect the way the market moves. But besides the dollar or DXY, we can see that the market is on a downtrend. So I'm expecting to continue doing what? Looking for a sell on AUD USD. When we go on a smaller time frame, let's say not really smaller, but 4 hours time frame, we can easily see that, yes, on top of there, we can easily see that the market did touch our resistance here, and we saw the market pushing lower. Fortunately or unfortunately, we can say we had an area of a resistance. The market touched that and pushed up again. There is a chance for the market to break that, obviously. The market can still continue pushing lower. So I saw GBP USD, GBP, let me see, GBP USD, GBP, CAD JPY, GBP USD. Let me check that for you. GBP, or let me just continue with this pairs. I see USD JPY, USD CAD, then I can continue with them. Or let me just go straight to GBP USD, then I will shuffle with the other ones. So on GBP USD, previously you can see that we did have some seriously downtrend structure. So obviously now we can see that the market is trying to do what? To push the upside, and we can call that an uptrend. But let's go closer. With this structure, we can say, yes, we have a very nice structure pushing to the upside. But what I can say is, we don't really have a proper support area. When we talk about proper support area, I'm talking about where we have these reversals, especially on top of this support. So I drawn this support just to show us where the market was going, or maybe we can say the uptrend. So I'm still waiting for a proper support area. So because this point here, it was under that downtrend before. So it's like we have only one, and the second one, we don't really have that. So we are waiting for the market to reverse so that we can have a proper support area. Yes, it shows that the dollar is a bit stronger, but when the market opens in 15 minutes, we might see the market trying to reverse. So we have to have proper structures, guys. Yes, we can see that the market was aggressively pushing to the upside. So yes, there is another room for the market to do what? To reverse before we see another continuation of that buy. But our job is to do what? Is to wait and see, or to get where the market is going to go. So let's wait for the market to show us the structure before we jump on that. Don't get in front of the market. So I hope maybe this it's clear. Another pair. I see USD Canada. USD Canada and CAD JPY. So let's go on CAD JPY. Where's CAD JPY? CAD JPY. Let me just go on a daily time frame. I just want to understand. So as I did explain earlier, I don't really know why JPY was so strong. Maybe they did increase the rates or something like that. But from a bigger picture, on a daily time frame, we can see that yes, the market was nicely pushing to the upside. Yes, we did reach a nice level there. We call that resistance. Now it seems like the market might even push and reach this support area. Do you see that we have a very stronger support area down there around 100.000 before maybe we see the market pushing up? Yes, on a bigger time frame like this, I don't think it's surprising to see this type of reversal. Why? Because we also had an aggressive push to the upside. You see that this was like seriously aggressive push to the upside. So what pushes when the market pushes to the upside, seriously, you should also expect the market to push to the lowest side. But where we are now, I can say I'm still expecting to see maybe some more reversal, but I don't really expect this type of a reversal. Maybe the market will try to go slower until we reach this support area. But at the end of the day, on a bigger time frame, it shows me that we are actually on a very nice uptrend. So I think that will help. Someone said, Kenzo, check gold potential sell to 2000. Okay, let's check that and see if maybe we have something there. Obviously, the market seems to be trying to reverse. So on a bigger time frame, maybe you will see. Let me maybe just go on a weekly. You will see that we had a very, very, very nice push to the upside. So on a weekly time frame, you can see that on top here we have some areas. You can see this point, and also this point. So that is actually a very nice structure. We can call that reversal. So I mean a resistance. So the market can actually respect that and push even lower. You can see every time when the market reaches that area, the market used to go down. So now let's go on a proper time frame or a smaller time frame. What's really happening? So we had a nice structure. The market did reverse there. We had something like we can call it that a support area. The market was pushing up. We also had a horizontal support there. You see, now we had an NFP a few minutes ago, and the dollar was a bit stronger. So it shows a very nice breakout. So I don't actually encourage anyone just to sell now. Wait for the market to open, because the market can reverse aggressively. Where we are still very closer to the support. You can see this support here, or this area where the market was consolidating. You can see from this point here, if you draw going further, we might still see the market respecting this area and push the upside. So you should draw your support very proper. Or let me just draw it there. But it's fine. I don't really have to put so many lines, but you can see that we have this area. You can say if the market goes below that area, now I can say yes, we can take that sell. If not, we might start to see the market reversing again, pushing to the upside as the dollar is losing some momentum here and there. So another pair. But there is a possibility for the market to sell also. Oh, but I see someone said, Kenzo, the market might sell around until it reaches 2000. I think yes, that is possible. We might see a reversal around that area. So USD CAD, let's check USD CAD, what's really happening. So on USD CAD, we had a very nice downtrend because the dollar was losing some momentum. So we've been looking for some very nice sell going further. But on top there, we have a proper support area. Then the market was aggressively selling. You can see the market started to sell aggressively. But what we have now, we can say we had another structure inside. Let me just remove this. We have an area that we can call a resistance. If the market breaks that, it means there is a chance for the market to move or to go towards our resistance. We have a resistance on top here. So if the market breaks this area, which I think the market might respect, the market might respect that. If it breaks, it means we will be expecting the market to touch this resistance and push lower. If not, the market might break that resistance and start to push the upside. That it will mean the dollar is getting its momentum. But for now, we have structures that the market needs to break before we think twice. You see. So yeah, let's see another one. Okay, thanks, man. Guys, don't buy this guy's patient is gold. Let's see another gold. I think I did check gold, Euro USD and Euro JPY, GBP JPY. Okay, let me check that. Nasdaq 100. Okay, let me check Nasdaq 100. I will go to GBP JPY and see what's really happening. So on Nasdaq, we have a very nice structure. You can see that, yes, we had a proper sell or proper downtrend previously. Now we broke out of that. Now we are expecting the market to do what? To continue pushing to the upside. So where we are currently, the market is just consolidating. Yes, just because it's 4 hours time frame, we did have some nice buy positions. So we can just extend this. We can extend this structure. So we have a support. Once the market reaches this area, we might look for a buy, unless if the market tries to do it to push even lower. But since I'm bullish, I think the market might respect this support and keep pushing to the upside. If we break this resistance, obviously that will show a continuation of that buy. As we are already on an uptrend, we're no longer on that downtrend. And what I like is we don't really have enough effect from a Nasdaq. So we might start to see a very nice bullish move going to next week. Next week, we still also have some very proper economic news, which is going to be CPI. So let's go on GBP JPY. Yes, sir, this was a proper move here. Let me go on a daily time frame. Yeah, I think the market will reverse. On this one, it's just straightforward. This aggressive push, the lower side was like seriously bearish. Even now, I don't know what happened with GBP JPY. I'll have to do my research on that. But on a bigger time frame, I start to see that yes, this area is something. The market did come here few months ago. Again, some quite similar moves. Do you see that? So the market gave us quite similar moves. So obviously, I'm expecting the market to continue pushing to the upside as we saw before. So if maybe you trade GBP JPY, I don't know, but it seems like the market is moving away from this support area. If you get in, you have to plan your stop losses and stuff like that, so that if maybe there is any reversal, you can still survive that. But I think the market can still push to the upside, you see. So let's push to the next one. I think USD CHF. USD CHF and Nasdaq 100. I see Nasdaq 100. I think I did Nasdaq 100 or Euro USD also. So on Euro USD, quite similar to GBP USD, guys. Quite similar to GBP USD. What we had before was the market was on a very nice downtrend. Now the market is about to do what? To give us that uptrend. Unfortunately, it seems like the market wants to push even lower. So let's go on 4 hours time frame so that we can try to check what's really happening closer. So GBP USD, GBP USD, Euro USD, they were still on. This trend was still very fresh. We did not really have proper support area. So when you see this line broken here, don't just say maybe we broken out of the support area. It was not really that strong. We did not really have proper touches. So we were actually relying on this horizontal support and resistance. So what we have now, we're just waiting for the market to just show us the road. We can say, yeah, the market is pushing lower. We can see that, but we don't really have a proper resistance and support. Now the market is creating that structure. Maybe if we have a nice retest, we can say maybe the market will continue. But we also have another area that the market can still respect. Remember, the market doesn't really want you to get on a trend very nice or early. The market might reverse like this, and once you think maybe it's a sell, then the market might start to bounce back and start to push the upside. And that might be a pain because maybe you knew that the market was on an uptrend. A few minutes later, you think that the market is going to sell, then the market changes the direction. But the best thing is to wait for the market to create the structure, then follow the structure, because we need to draw this support area on top of the structures. We don't really have to guess what will happen, whatever. So we have to wait for the market to give us something before we connect the dots. So USDJPY. Okay, USDJPY. I think what I covered, it makes sense, guys. I hope maybe you're learning something. USDJPY. Plus, it's Friday, so you don't really have to just jump on the market unnecessarily. You might lose. Mondays, they're quite similar to Mondays. Fridays quite similar to Mondays. They are crazy sometimes. So we are on USDJPY on a daily time frame because this trend is quite clearer on a bigger time frame. What's really happening? We can see that this area is our highest level, and when we go back on our left, we can see that we also had quite similar structure there as a highest area. So that is our resistance for now. So we see that we had a proper support area. It seems like the market just broke out of that. So I will just go closer just to see what's really happening. The market broke out. I'm expecting to see maybe the market coming back to retest here before we see a continuation of a sell. If not, it means maybe the market will be going back on that bullish move. But as you saw on a bigger time frame, like a daily time frame, that breakout is a bit far. Maybe we might start to see a nice continuation of this downtrend as we just broken out. I think that maybe might help. So anyways, thank you very much.
Kenzo, awesome stuff. And thanks too also for talking dollar yen. I think it's probably on the minds of a lot of traders right now. It's an incredibly volatile pair with what came out of Japan, basically the idea of potentially being positive rates at some point, while meanwhile the rest of the world is talking about cutting rates. So definitely a shift in the narrative there for the Japanese yen. Guys, I just want to say a big thank you to Kenzo. We won't keep any more of his time, but if you guys would do everyone on our team a favor and make sure to go subscribe to Kenzo on his own YouTube channel. We've got his link here in the chat for you. If you click this, again, it will take you to his YouTube channel. If you'd like to see more from Kenzo, obviously you guys love him. He does this probably once a week with us, and just takes over the show, does chart requests for you guys. So again, if you want to thank him, the best way to do that would be to go subscribe to his YouTube channel and find more free information there. Kenzo, thank you very much for coming on the show, man. Appreciated your commentary as always, and we'll see you back in the next one.
Thank you very much, man.
All right. See you, Kenzo. Yeah, and also just a shout out to Kenzo and to Ivan. Both of them are in, they are in a part of the world where it's much later in the day, and they're spending their Friday evenings coming on the show, adding value to the trading community. So highly, highly recommend you go to subscribe to them. I can't tell you that I would always be on a Friday night streaming. Some Friday nights, you never know, when things get a little crazy, I might throw the stream up, but for the most part, big shout out to them. Big thank you to them for coming on as always. And I think we do have some news. James has some news for us. We have got basically a rundown report from James. He does this once a week for us. It's fantastic, or a couple times a week. just a great way to keep up with everything going on in the world, as well as setups, things to consider, fundamental shifts. So we'll have James in just a minute. When he's ready, he'll let us know. Speaking of some volatility, the NASDAQ, what was interesting is that I honestly would have expected to see a little bit more sell side off of the NFP report today. NFP came out again, cooling jobs. Lower unemployment, strong jobs, and average hourly earnings increased. Of course, it's good for the people who are getting the raises, but I guess the question would be, a strengthening labor market in some ways trickles through and makes prices higher, right? It is an inflationary metric in some ways. If everybody is employed and getting jobs, that's obviously a good thing, but it is also something that does contribute to people go out and spend more money. They go travel more. They go buy a house, buy a car, and all that stuff creates demand, which can create increases in prices, which the Fed has been pretty clear they're trying to get that under control. They don't want prices to keep spiraling higher because it hurts everyone, and it can actually cause really bad recessions. So this year has been a theme where, for the most part, inflation has been cooling. It's been actually seeing a lot of success. And that's why, by the way, take a look at something like the NASDAQ. It's had an incredible year and is actually very close to the all-time highs. I do think that going into 2024, we probably do see new highs on the NASDAQ, the S&P, the Dow. I think it's likely to happen, especially if this disinflation trend continues. Today was a bump in the road, however, with jobs numbers coming out hot. That could be a little bit of a short-term deterrent, but markets seem to be shrugging that off today and overall still holding in this consolidation zone. If you've been watching the S&P 500 as I have, we are still stuck in this range. My stop loss on my trade is still intact. I'll show you guys. I have my silver trade. My silver trade is not going well today. We are in the red on silver, though still very much in the green on the S&P positions that we've got. So stops are trailed, by the way, just below market structure lows, and we'll continue to watch that close. All right, guys, James is going to come on. He's going to do news now with us. We're going to talk a little bit about forecasting for the week ahead, get you prepped for that, and stick around. This should be a pretty insightful little segment. We'll say hello to James, and he can take over with news now. James, thanks for putting together the news, and we'll listen in from behind the scenes.
Yeah, of course. No problem.
All right.
All right, guys. So I have some news for us today, and we are going to start off, because it's Friday, we're going to start off with a look ahead at everything happening next week. And let me tell you, there is about a billion things happening next week. So we're going to take a look at Forex Factory here. This is my gigantic mountain of red folders image, because that's actually what we have next week is a crazy amount of news. So let's go ahead and I'm going to share this with you instead, and we can talk a little bit about this. So starting off on Monday, I know that I said that we had a million things of news, and we do, as you can see here. But Monday, we have one single little red folder, and it's the Reserve Bank of Australia's governor, Andrew Bullock, or Michelle Bullock, that's his name. Michelle Bullock is going to be speaking on Monday, and that is it for Monday. But Tuesday, we get a little bit more with the Clement count change, as well as CPI numbers in the U.S., so that'll certainly be a big, big day for news. Again, CPI numbers happening on Tuesday. Wednesday, we have pound GDP numbers, as well as core and PPI numbers. And then we have the FOMC statement, the federal funds rate right here. We have New Zealand GDP and Australian unemployment rate. So tons of big news events happening on Wednesday. That'll definitely be a double stream day. Wednesday the 13th, that is going to be a double stream day, because we have, in the morning we have PPI numbers, and then again in the afternoon we have FOMC. So that'll definitely be a big, big news day. Thursday, look at all of these red folders. It seems like everybody wants to get their new interest rate decision in before the holidays and everything kick off, I guess, because we have Swiss monetary policy, Swiss policy rate here. We have pound monetary policy, official bank rate statement, the euro monetary policy, and then U.S. retail sales, unemployment claims, and we're going to have an ECB press conference as well. And all of that is happening sometime Thursday morning, whether it's really earlier in the morning or a little bit later in the morning here for us on the East Coast of the U.S. We are going to have a ton of news happening on Thursday. And again, we're getting pretty much back to back interest rate decisions, whether it's the U.S. happening on Wednesday or Swiss Thursday morning. We have UK Thursday morning. We have Euro Thursday morning. And then, of course, the retail sales and unemployment claims, like I mentioned. And then finally on Friday is going to be PMI day, where we get our Euro area, our UK, and our US flash manufacturing and flash service PMI numbers, as well as the Empire State Manufacturing Index. And then to round everything off, around 12:30 in the afternoon here on Friday, we're going to get the Bank of Canada's governor, Tiff Macklem, is going to be speaking as well. So like I said, about a billion things to look out for next week, including like every interest rate decision possible. So definitely going to be a lot of market moving volatility happening next week. But let me share the slideshow back here with you guys again so we can keep on moving with this. Share. There we go. Thank you, Chandler. And here we go. So what's happening? The fourth Republican debate was held last night over here in the U.S., and election season really is in full swing. And I mentioned this a few weeks ago, but I want to give you guys a little bit of a reminder about what markets can look like during election season. So I have two screenshots right here for you of the volatility S&P 500 index. And what you're seeing here, this is the 2016 election year. We're going to take a look at the 2020 election year as well. But what you can see is we get a little bit of a pop here in 2015, and it starts to even itself out. And then in September, around election time, it just absolutely explodes. The election season here in the U.S. Can be quite chaotic, and it's no different for markets as well. It's typically what you see is a big pop in markets during election season, and again, that is kind of in full swing here in the U.S. with the upcoming presidential election. And then if we take a look at this is the 2020 year. Now 2020 looked a little bit different because there was a lot of other stuff happening as well. But you can see a little bit back in here in 2018, not a whole lot going on. And then we get into 2019, we see a little bit more of this volatility. And then 2020 happens, and there was a lot going on in 2020. But all of that to say, with presidential elections coming up, markets can get a little bit crazy sometimes. That's no secret. But what else is happening? I saw this report, and I thought this was kind of interesting. The U.S. announced joint. It's supposed to be joint. The U.S. announced joint military flight drills over Guyana. Neighboring country Venezuela is not happy about the U.S. doing their flight drills over Guyana because Guyana and Venezuela are neighboring countries, and tensions rose because of it. Venezuela is an oil-rich country and has been disputing over land that's held by Guyana for quite some time now. The UN Security Council actually had to get called in, and they set up an urgent meeting to try and intervene and ease some of the tension between the U.S. and Guyana and Venezuela on the other side of it. The U.S., however, said that it's going to continue to support Guyana and will continue running their flight drills over Guyana despite what Venezuela thinks, but also wants to try and work towards making sure that things don't escalate. So they're not trying to, directly make Venezuela or anybody, upset and have tensions rise. However, they are not going to stop their plans for their flight drills. Just because Venezuela isn't happy about it. And then the last thing that I got for you today is China. China vows to moderately strengthen fiscal policy to bolster economic recovery. If you are unaware, China's economy has kind of been completely falling apart as of recently. And, exports and stuff out of China are down. China is, it's no secret that China is a incredibly major, global export leader, and as of late, it hasn't been quite as good over in China, but they're trying to do something about that. So China is going to continue to step up. I think I've typed something wrong here. Proactive fiscal policies and prudent monetary policies next year. China also pledged to effectively enhance economic vitality, to prevent and diffuse risks, and to consolidate and enhance the upward trend of the aligning recovery in the world's second largest economy. Demand for Chinese exports, like I mentioned, demand for Chinese export goods has fallen this year. But China has already stated that they plan on vamping up their fiscal policies to try and kind of boost their the yuan strength and help out their economy that's been struggling for quite some time now. We have still about 20 minutes until the next news event, but I do not see Nick inside of the stream, so maybe we are done. I thought that we were going until 10, but maybe we're not. 1 second, guys. I'm going to double check that.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.